Hi, this is Jay, and I'm the student of MBA class 2021. I'm into second semester, and this is my course, Accounting for Leaders, where I'm presenting my final project as financial ratios for the company called Amazon, which we are all very familiar of. Let's talk about the company. So, Amazon is one of the most important business in the United States. By the way, it's like almost a $2 trillion company by the market valuation. And it is entirely based on digital streaming, artificial intelligence, cloud computing, and major business that we all know, e-commerce. They are competing along with Google and Microsoft and Apple, like one of the most valuable brands in the world. So by the standpoint of history, Amazon started in 1994 as a book selling online marketplace, started by Jeff Bezos alone from his garage. Then company never took back and they have been driving toward growth. So now whatever the field we see in the realistically along with the online marketplace, Amazon is everywhere. So they've been into software, they've been in also into tech world of vehicle companies, they have satellites area, they have covered those, then they have research and they have server farms and lot of other revenue generating entities. Recently, they also entered into the food market when they purchased Whole Foods and they're growing bigger into that as well. So now they are one of the largest internet company that we all know, but deep down they've been competing to all the different marketplaces, all the different companies and the different sectors. There was a one hidden sector they never noticed that Amazon is coming behind them, which was logistics. So when Amazon started as a marketplace, they started using FedEx, UPS, USPS, and in the parallel path, they started by buying aeroplanes to serve their own needs into the logistics. And they keep expanding, and now they are serving external parties as well. So when we say like when they started AWS back in 2002, I mean they started growing, and this has become one of the most revenue generating entity of Amazon right now. We know that their online marketplace is big, but one of the operating cash and cash equivalents and profit all are coming from that AWS business units. Now, when we say they started big on logistic, they've been going and going, and they have like presence in almost all the companies directly and indirectly in all those countries. They call themselves as Amazon Logistic as well. So I mean, whatever the place we think, they've been growing and it's constantly expanding their coverage. Now they have almost more than 1.5 million employees all around the globe. And especially when we talk about US, it's 800,000 plus. So this is the summary about Amazon. Company analysis and selection of ratios. To understand the health of the system, Amazon uses three financial ratios: sales growth rate, profit margin, and the traditional valuation metrics. This indicates to tell if the company is growing in a positive or negative direction by looking at the sales growth rate. This is critical because Amazon typically makes capital investment every year, and this capital comes from the cash flow from all of its operations. As a result, when the company takes such a risk, growth is critical because there is no other cash available for the company to make additional investments. When it comes to profit margins, Amazon is always looking to increase market share so that economic sales can be leveraged to a lower cost later on. Amazon stock is frequently high with the price to earning ratios of 79.17 in 2020. Talking about profitable ratios. So profitable ratios provide an estimate of the company's ability to profit from its sales or from different operations, shareholders' equity, or even balance sheet assets. These ratios can be used to determine company's profit as well as the value of its stakeholders. These profitable ratios should frequently be higher in order to be fair because they can compare to any other similar companies and understand the company's historical performance in the industry standard. Now let's deep dive into different ratios in the following slide. So one of the ratio is profit margin. So profit margin is defined by net profit divided by sales revenue. So this ratio is known as a return on sales, indicates the percentage of each dollar sales the company is generating after expenses like cost of goods sold and the other expenses are deducted. This ratio we can see here in the Amazon's case, like they were at 4.13% in back in 2019. Now they're growing as 5.53% in 2020. Whereas if we compare this to the industry standard, which is 1.3%, company is doing very well and the better positions on this case. So next ratio is return on equity. So return on equity is defined by net profit divided by average shareholders equity. So here if we analyze the data, we see that in back in 2019, they had 11,000, which is actually in billions. So that was the profit divided by the values, and it was like 21.95%. That grew in 2020 as a 27.44%. Now, if we talk about industry standard, which is minus 10%, which is negative, so company was in a better position compared to the industry average of negative 10%. Next is assets turnover. Assets turnover is defined by revenues divided by average total assets. In the case of Amazon, back in 2019, they were at like 1.45 times compared to their average total assets. They increased some numbers into the revenue, but so far they had a total assets also increased. So now the assets turnover ratio is 1.41, which is actually reduction from the earlier year compared to the industry standard of 1.33 times. So we can say that company is in a better position compared to the industry average, but it was a little bit close to the number. Next is receivable turnover. So receivable turnover is defined as revenues divided by average accounts receivable, which is we call it AR. In the case of Amazon back in 2019, it was defined as a 14.96 times, and now in 2020 it grew to 17.02 times. When we see of the industry standard, which is 16.59 times, so we can say back in 2019 they were performing not good compared to industry standard, but now they are doing better on 2020. So these receivable collections efforts of the companies are growing better when compared to the industry average of 16.59%. Next is current ratio. So current ratio is defined as current assets divided by current liabilities. In Amazon, back in 2019, it used to be 1.10, and then in the next year, 2020, it became 1.05. So it actually reduced that number, and if we compare those with industry standard, which is 1.34, both of the year they were performing low. So we can say that company is not in a better position relatively to industry because 1.34 is significantly higher than 1.05. Next is cash ratio. So cash ratio is defined as cash and cash equivalents divided by current liabilities. So here in the Amazon's case, back in 2019, it used to be 0.41. And now in the next year, 2020, it has been reduced to 0.33. So it's not growing good because it is reduction of numbers. If you compare that with industry standard of 0.30, I mean, definitely they are doing better, but it's not something very significant, which is very close to 0.30, between 0.33. I mean, the companies they've been competing like Apple, Google, Apple have like zero point 0.7, which is way higher than what Amazon has currently. Next is debt ratio. Debt ratio is defined as total liabilities divided by total assets. In Amazon's case, back in 2019, those were at 0.72%, uh, sorry, not percent, 0.72, and in the next year, 2020, is become 0.71. So there hasn't been a significant change, but if you compare with industry standard of 0.73, I mean, it is fairly close. So we can say company fares better when compared to industry standard, but I mean, it is very close and it does not say significant improvement. Next is interest coverage ratio. So interest coverage ratio is defined as EBIT divided by interest expenses. I'm just want to repeat that this is EBIT. I'm not including depreciation and amortization. So in the case of 2019, the ratio was 9.09 times, which actually increased in 2020 to 13.9 times. So I mean, if we compare this with industry standard, which is 0.61, this is way higher and significant differences. So we can say company is doing better when compared to industry standard, and actually this is a good number. So comparison between these all calculated financial ratios versus industry average, and what's the recommendation. So in the case of Amazon and all the data we analyzed earlier, liquidity ratios show the company financial ability. Amazon has recorded decreasing trend. It needs to work on the areas of credit recovery to increase the ability of paying its debt. Overall increased trend is a good sign of growth and a step toward achieving the market needs and becoming a leading brand on board. There are many other companies giving high competition to Amazon, so the company is recommended to work on the areas of early debt payments by making early recovery to be strong in every financial area and to be the largest company of the industry. Industry is ever growing and the competition also follows the same path, so it is also recommended to continue working and improving on its areas of business and work for the development of its application and website to give a better customer experience and minimize its terms and conditions on getting registered as a seller, which will in the future lead to increasing number and ultimately increasing business. Similar case, if we expand our thoughts, their measure of the profits and the revenue coming from their server business. So if they do the same suggestions followed by the ratios in the same sub areas, I mean, it's a very big opportunity. They can improve these numbers. Overall, there are a lot of ratios like liquidity ratios, leverage ratio, efficiency ratio, profitability ratio, and market value ratios. But so far, whatever we covered, and from those ratios and numbers of the profile for Amazon, we can say in conclusion that the company is doing better when compared to its previous year performance and industry averages in most of the cases, except in the case of liquidity, where the current ratio is lower than what compared to the industry average of 1.34. Amazon is doing better for sure to serve the society each day, and its increasing number of customers clearly shows its ability to perform business. It is one of the largest brands at global platform which is working to win the competition by fulfilling the customer demand and serving them in a best possible way. These are the references which I use to study these ratios and prepare this presentation on the Amazons. So basically, I used 2019, 2020, and 2021 annual reports from Amazon websites, and I retrieved those and I studied those. Thank you.